Good afternoon. Welcome to the Business BoardCast. I'm Nicky Larkin. So I'm the founder and MD of Contractors, and today I'm on my own, but it's okay. It's fine. I am talking about a subject that I've been working in for the last 25 years. So if I can't talk about it for 30 minutes, then that's not a good sign. So I'm talking today about how to prepare your 2022 budget. So please do show that I'm not on my own. Please do say hi in the comments. And please do show me put in your questions, please. So it's just lovely to hear from you. Hopefully this is all working. Hope your mornings have been good. Mine's been a bit of a mix. It's been non-stop since 7 o'clock meetings. Hardly caught my breath. And it's been a very varied morning. Lots of challenges to get through, but hopefully helped all the clients and that they're all doing well. And had a nice thing this morning that one of my it's Lynn there. Hello, Lynn. Nice to see you on the live stream today. And I was very excited this morning. My favourite podcast. Those that know me well will know who that is. So I'm not going to say a name drop at this minute, but one of the hosts of it has followed me on Twitter, so I feel like I'm their best friend. Anyway, so I am talking about budgets today. So please ask questions as I go along. I'm going to try and give you a good structure, go through how you can approach them, because often clients they're a bit scared of putting a budget together. You know, they think it's a huge task. They don't know where to start. They don't know what they should be aiming for. So I'm going to try today to help you through the whole process from beginning to end. So hopefully that you will feel a bit more confident, and you can try, if you haven't already prepared your 22 budget, which of course I have, try and help you feel confident enough to have a bash at it yourself. Whether it's on your own or with your management team or with the help of your accountant. So first of all, you know, the whole purpose, why would you budget? So there's various reasons why you want to have a budget. So first of all, you want to be able to, so looking at 22, you want to be able to plan your resources. You need to know how many staff are you going to need, what other resources are you going to need? Are you going to need more offices, more manufacturing space? Are you going to need a whole new amount of IT equipment? So it's really important for planning, because a lot of those things can't just be turned on automatically on the tap. So you need to know, have a good idea when that would happen, so that you can make sure that you can get those things organized. So that's one thing, with planning the resources of why you would want to do a budget. Secondly, it also means that you're all, as long as you're sharing that budget with your team, it also helps you all work towards that common goal. The actual process of doing it with the team as well, involving them in the process of actually making the budget, makes them feel involved, means that they can hopefully see that it is a realistic budget, and that they can help you achieve it. So, and it gives you that common purpose, so you're all, as a team, all working towards the same thing. It also helps with financing. So whether if you need to have bank financing or you need to have additional investor capital put in, then you can, I mean, there's lots of different reasons, but one other thing, it does help with financial stability. It helps you to prevent any stresses and strains from potential over trading. It can help you to identify any potential gaps or timing in your during your year of when you may have some issues. And also it helps you to look forward at looking at your growth, looking at, you know, what are you wanting to aim for, and showing that you have got a good amount of future growth if that is what you are trying to achieve. So you know why now why you've got to do a budget. So now the next thing is, who do you involve in the process? So if you're in an absolutely huge company, I've worked in some huge billion-dollar companies before, and when you in those, you'll have dozens of accountants involved. You'll have all of the managers at all the different levels being responsible for their own cost centers and profit centers, and you'll be getting involved all different stakeholders to get involved, whether it's suppliers, your bank in there, your investors. You just, almost everybody seems to be involved in the process, and it's a pretty long process as well when you are talking about multi-billion dollar companies. I'm going to assume for today that you are all SMEs. So whether you're a startup or whether you've got a nice business that's turning over 20 million now, all of what I'm going to go through will be applicable for you. So, but it's more realistic for what the time scale and the involvement will be for more of a small to medium sized enterprise. So I would recommend that in an SME that you do at least involve your managers, because you want to have their buy-in. You will be giving them targets. They should hopefully being able to provide certain things. They might have some more specific information which you didn't realize. So involving them in the process really does help. I would also say what's a good idea is to put together a timetable. You may not be surprised, for those of you have worked in corporates, but but others that haven't worked in corporates, you might be surprised that often budgets in very large organizations sometimes don't get set until after the year has already started. It started before the start of the year, but for various reasons, they took their sweet time and they ended up deciding their budget. You know, say they were a December year end, might have only decided and got it signed off on February or March. Well, I think that's absolutely terrible. It doesn't help anybody, because you've got those months of uncertainty in the business that you're not sure what you're actually trying to aim for. And then you're trying to hurriedly achieve all of those aims of the budget and of your business plan within, 9 or 10 months rather than in the full 12 months. So I would recommend, wherever possible, try to ensure that when you plan your timetable, your timescales for your budget, that you try and make sure that the actual finalization of the budget is before the start of your year. So if you work on a calendar year, so here at Gorringe, I like to work on a calendar year. So we've got December year ends. So this year we did do our budgets a little bit earlier. Normally I would be doing the budget cycle in the last quarter. Wouldn't leave it right to last, because December, January is super busy. So we try to have it finished by the end of October. This year, because I was actually going through a phase of doing a 3-year cycle, I did it a little bit earlier. So I actually finished it a few months ago. But I still can edit it if I need to, if there's major things that change. So definitely agree, because you've got to be realistic. How much time do you want to put onto this budget? You need to put enough time into the budget process to make it realistic and meaningful, but also you don't want to be putting so much time into it as taking away from actually achieving those sales and delivering your goods and services to your customers. So you need to have a balance there. So I'm gradually involving more and more people as we gradually get bigger. So I involve the management team. I generally involve them at sort of the higher levels. A lot of our stuff is more predictable because of We have a lot of annualized revenue and a lot of similar costs year on year. So once we've sort of agreed the top level revenue that we're aiming for and the level of profit that we're aiming for, we can sort of squeeze the rest of it in between. But for those that you need to know a lot more detail of how to do that, because you haven't been doing it for 25 plus years, the amount of budgets I've had to put up together so far. But first of all, you might think about that you might come across different budgetary methods. Oh, and Nigel, I have seen your question. I'm going to be answering that shortly when I come into the sales section. So hopefully I'll answer that fully there. So thank you very much for your question. And please do keep putting in your questions and I will answer them either immediately, or if there is a section that is coming up, I will fill them in at that time. So budget methods. There's two things I'm going to go through: budget methods, and then also the actual software or models that you may want to use. So there are many different budget methods, but I'm going to just talk to you about the most common, the ones that I've seen. I've worked in quite a lot of organizations, and at Gorringe we've looked after hundreds of different businesses. So these are the ones that are the most commonly used. There's a top-down budget. So that's where the board or the MD, if it's just one person making most decisions, but generally if it's a board, they're deciding, right, this is where we need to aim for. We need to achieve. Usually they will actually say an amount of profit that they're aiming for. If it's in a fast growth cycle, they may give it more of a revenue target that you would be focusing on, especially if you're in a fast growth cycle. So you might be in a technology area where you're just trying to build up market share and you're not actually in a profit position. You will keep working towards that. So that's where top down is. So the hierarchy will dictate what you are allowed to need to achieve in your budget, and then you gradually work down through the organization, taking responsibility for different parts of the budget and making sure that the total budget does equal either the profit or the revenue target that has been set from beyond high. The other way, which actually can be a slightly slower process, because for various different reasons. I've only got half an hour, I haven't got a whole afternoon, so I won't go into all the different reasons. But the other one, one other one that I'm going to say, I'm also going to say two other ones, but the next one, the second one, as we've said, top down, the next one is bottom up. So that's where, so you might have in your organization, say you've got 100 people, you might have 5 divisions. And so you might say to the heads of each division, you may say, okay, right, I want you all to put together your budgets. The different division heads may have different sections within their divisions, and they might ask their little areas to put together theirs, and then they consolidate. So that bottom up approach is slower, because what happens is the lower levels put their stuff together, it gets consolidated, it goes up to the management level. They may say, actually, I don't like the look of that, try again. And they keep on through lots of iterations until the management level decide it is ready to present to the board. And then again, you may still then have the board may say, well, I'm sorry, that's not acceptable, try a bit harder. Goes all back through the cycle, and that often is why companies do miss their deadline. They might have been told that they're doing this bottom up, but actually the board does know what they want. It's just they haven't told the rest of the organization. They've tried to see if that they can come to the same conclusion on their own, but through the consolidations, that is just not adding up to the right thing. So they have to keep going through multiple iterations and just keep churning, keep reiterating, keep on having more meetings, seeing what can they cut, what could they create, are there any new things that they could put in. The third one, which in some ways is probably the more simplistic method, and it's also the one that I see a lot of small businesses use. I personally use the top-down method, so it's not showing any secrets, but we do the top-down method. So I know what our overall vision is, but I want my team to be able to help us get to that. So that's why we do top-down. But so the one that seems to be most common in small businesses, the medium businesses, I see more of a mix of the top down and the bottom up method. But in small businesses, I see more often than not the historical plus method. So they go, right, okay, what did we do this year? Let's pop on 5% to everything. That's my next year's budget. Now, that actually can be quite simplistic. It's, it's something to start from. I personally, as a planning professional, I don't particularly like that idea because I don't think it's particularly sophisticated. Does a lot of us out of the jobs by doing it so simple. But also it's just not very thorough. It's not looking at what the actual realities are. So, it's all very well putting +5. Well, there was a client this morning that was telling me about, well, actually, a lot of their material costs have all shot up by 9 or 10%. And apparently aluminium's gone up by 35%. So try putting a cost +5% to that scenario. It just doesn't work. So, it might work for your business, and that's fine. At least you're putting together a budget. It's just not my favorite, but that's fine. That's fine. You've got to do what works for you. Okay, so Nigel, this is your one. I'm going to go because now what I'm going to do is I'm going to go through how do you approach each area. So I'm going to go through the sales, how you put together your sales budget, and then go through the main categories of costs and how you put that together. So Nigel's kindly put up a question, and his question is, hi Nicky, with the last 12 months, won't many companies find it too difficult to forecast a sales line? Yeah, I'm not going to swear, but absolutely right, Nigel. It is. This is as somebody who has been doing forecasts since the year dot, and I love doing forecasts. I love doing budgets, but it has not been. I've never seen it so difficult to predict and budget and therefore forecast. But there are strategies and ways to get around that. So when I said the different types of methods, there is another way that you can also do. So you can use whichever of those methods, but what you can also do is put together 3 different scenarios. So you will have your main scenario, say in your top down. You'll have the main one. You're aiming to get to 5 million revenue next year, and you want to have £600,000 profit. That's your main revenue. So that's your mid-range scenario. Sorry, Nigel was particularly talking about sales. So I'll skip out the profit part and just talk about the sales. So you're aiming for 5 million next year. However, Brexit, can we actually get things to anywhere? We've got fuel crisis. Can we get the lorries on the road? We've got resource issues. Can we actually get anybody to do the services or install our products or deliver our products? So there's a whole perfect storm at the moment of loads of different issues, and I'm not even mentioning COVID yet. So that's not even including COVID or the next generation of whatever the next COVID issue will be, because, I don't want to be doom and gloom, but, I was one of the first people saying that we needed to plan for 18 months for COVID. I was saying that back in January last year. I am pretty sure from what I read, there will be some other type of virus crisis at some stage. So you do always, when you do your planning, make sure that you're planning in that you might have another COVID-like event. Hopefully there won't, and I'd be delighted if I'm proved wrong, but I suspect, unfortunately, that will happen at some stage. Anyway, you've got your mid-range, you've got your £5 million revenue. So what you also have is what happens if all of those terrible things that are delaying your sales, delaying your actual production, if they all hit, what happens? What will be your baseline? So you might go, well, actually, even if all those happens, they're hitting the different things, so there's a lot of not sures, I'll still know that I can do 2 million in the bag. That is your base scenario. Okay, you are absolutely 99% sure you can deliver 2 million in that budget. That's then your base scenario. You then also, you have, as I am an optimist, you have the higher level scenario. So what if everything goes right? You know, suddenly everyone that's come off furlough decides wants to be a lorry driver, that actually we suddenly find a whole load more aluminium somewhere and there's loads more factories pop up that can process it, etc. You know, say that there's no another COVID case in sight and we decide to join back to the European Union. Say everything all lovely happened, which I'm not predicting that it will, but say it did, then you might say, well, actually, if all of these things actually did happen, so I could have my absolute best case, I would be able to deliver 10 million. Not the 5 million, which I feel fairly confident about. I'd be able to deliver 10 million. So that's what you do. Then you might think, oh my God, that's huge ranges. But what you do is then you have a budget for each scenario, and you need to make sure that as you go through the year and you see, right, actually, yeah, everything is looking a bit horrible. I'm not hitting my 5. I need to go and just work really hard on my 2 million. Then you go and decide, right, okay, so I need to resource appropriately for the 2 million. You know, you need to make sure that you've still got the right profit levels that you want to get to. But you need to, you change everything up and you change your whole planning process. Now, that is a complete pain, but that is the reality of the situation now. You have to generally have your plan A, which is what you're expecting to happen, but you have to have your worst case and you have your best case, and make sure that you can adapt quickly to whatever situation. When I go through some of the different cost ones, I can go through how you can adjust for those. Although I'm already at 8 minutes left, so I'm going to have to steam through. So how do I actually decide that 5 million is my sales figure? So what I will do is I will look at, well, actually, what is the market? What have I historically been doing? Also, what is the market? Because, you know, if the market for selling green frisbees is only 20 million, then it would be ridiculous to put 50 million in, because it's just not realistic unless, you know, some influencer decides that green frisbees is the thing to go. But, you know, to be realistic, what is the realistic market size? What percentage do you think your business will be able to get? That's one start. But then also it's looking at, well, actually, if it's a higher amount, how quickly can you actually ramp up to those higher levels? Because in many businesses, they won't be able to go from 1 million one year to 10 million next year. There has to be a growth cycle. They can't just ramp and turn on the switch like that. Some businesses can, which is fantastic, but some can't. They might have to, you know, they've got different steps in their process. They might have to get more premises, set up more factories, hire loads and loads of staff, and so a lot of those things is very difficult to do overnight. So you'll look at what is the realistic market. You'll look at what you've historically done. You'll look at what you feel comfortable getting to with the different limitations you've got within resourcing, as I said. You'll look at the different drivers for that business. So, you know, whatever it is that's driving that thing. So it might be that the whole marketing cycle takes that time. So whatever you change, you might not affect it for 9 months. It might be that your sales lead cycle is 2 years. So actually, you already know pretty much what next year's is. So there's no point putting anything. You will basically look at your order book, and that is what your target is for next year, is your order book, making sure that you can deliver upon your order book. So you'll be looking at your pipeline, you're looking at order book. You will put all of these together, and then you will make a judgment as to what is the amount that you want to aim for and that's realistic for your organization. I always like to have that it needs to be a certain amount of stretch in there. Also, if you are setting it for other people, it's always good to have some contingency in. So if you know at the high level, and everyone else doesn't have all the full figures, if you know at a high level, for you to achieve what you want to achieve, you need to get 5 million revenue, it's absolutely no harm giving them a 5.5 million target, because then you've got that bit of contingency. So if something doesn't quite go right, or if one particular manager doesn't hit something, you've got some contingency there to hopefully still achieve what you actually want to achieve as a business owner. So I hope that answered your question, Nigel. I'm going into costs. I'm going to speed through costs, but hopefully this will give you a gist, and I'm very happy to answer any questions offline separately. And I think because it's such a big topic, I think I should make a full webinar. This should be a full hour thing. So I'll look out for a webinar in 2022 on budgeting. But so first of all, cost of sale. So you've got your materials. Let's assume that it's materials in this instance rather than the services business. But for the moment, let's assume it's some sort of manufacturing business. You've got your materials. So what you need to be looking at is what the market trends are. What are they predicting that prices are going to be for your base materials? You may want to hedge it by either buying the stock up front because you're really worried that it's going to go up. You might need financing for that, so you've got to offset. Is paying for the financing worth it for ensuring? Oh, thanks, Nigel. Great answer. Thank you. So you need to look at what is the best way for you to making sure those you've got those materials. You might need to want to order them in advance to ensure that you've got that, especially if there's a limit of the amount of supply. Like that's the thing with Brexit. Lots of people had just-in-time models for their production. Well, that went out of the window if they thought, well, actually, I've got to get this part from Italy and I just don't know how long it's going to get. So they built up stock. So, you need to look at what stock levels are you going to need. What is the market looking like on the projections? On a lot of the base materials, you'll be able to see there will be a lot of trade analyst projections of looking at how much it's likely to be going forward, because there is a market for people, a commodities market for buying things going forward, so which influences it. So you can get an idea of whether you need to do some deals now to save your base costs going up if you can. It's also important to build really good relationships with those suppliers. Make sure that you don't, you can't deliver because you've fallen out with them. So you need to have good relationships, whether it is about, giving them certainty to their business. So by giving them forward orders, or perhaps giving them deposits on account if you happen to be flush with cash. And in some instances, which I've seen quite a lot recently, you might want to be really, you might want to secure your supply chain. So you might actually buy your main provider of those, so that you do a bit of vertical integration, and that's a classic Marks and Spencer's thing that they do, so, and many other businesses. But that you may just think, for security of your business, you might think, well, I've got to have my supplier, I need to buy them, or have some sort of interest in them, but become a shareholder or something, just to ensure that you are going to have Now, the next one is, sorry, having to race over these because it's just such a huge topic. Staff, things there to look at staff. How many? Flexibility. Are you the different times of the year that you're not going to need so many? Are you going to have to ramp up suddenly? That's when you need to look at the balance between having. I'm going to overrun slightly. I'm not going to slightly go over. Give me 5 minutes, okay? Thank you. Whilst you're having your cups of tea, just 5 more minutes, and I'll be able to wrap up. So staff. Look at your balance between contractors and staff. Look at whether it could be high. Having using the contractor market, it does enable you to sometimes switch that supply off when you don't need it in your quiet seasons, but without having that base cost of the staff. So, for example, when I worked in a very large engineering company, we always had that essentially we'd have a third of the staff were staff. And then the rest were contractors. So as projects closed, or we're waiting for another project to start, we were able to switch off those contractor positions. Yes, they get paid higher. And now there's a lot more issues with the IR35 and things. So, you've got to make sure that you're adhering to those things. But by having that flexibility, by paying more for short term is sometimes better than having that cost throughout the year when they may have a lot of downtime. Also, now with the staff, be thinking about, well, where do you actually need them? There's so much remote working now, hybrid working. The prediction is, it's all, if people aren't going back into the city as much, well, why not? Why won't they? Why do they have to keep paying city wages? That that we've already seen lots of people up in arms because their London waiting's being turned off. Why hire people in the city if some of it's going to be done remotely? Why not go and hire in Cornwall or Yorkshire or or perhaps Hungary? Wherever that they feel that there is the skill level, but at a cheaper amount. So there's much more flexibility that people will be looking at now. And also they will be looking at whether the balance between hybrid working, because that definitely does seem to be a very high requirement for staff now. The majority of staff do want hybrid working. They've liked elements of working from home. They have missed the office in some ways. So having that hybrid seems to be the perfect scenario. You see, I'm in home today, whereas, usually a couple of days a week I'm in the office. So I mix and match, but I tend to have Fridays as my home day. Then buildings. If you haven't got loads of staff in offices, or you're able to move things to other places, you might want to have more flexibility in your leases of your buildings rather than buying your buildings. Or you might be wanting to say, well, actually, like I've been looking, I'm intending to trade another 10, another 20 years. So actually, I want to look at the options to, a lease to buy, perhaps, rather than if I know that I've got, rental costs for another 10, 20 years, well, see if that's a possibility. So, you want to look at your whole suite of your premises, look at possibilities of buy versus lease, rent versus flexible leases, and you want to have a whole there, because usually that I'm going through the costs in order. Your cost of sales is the most expensive usually, because that's your materials, that's what you're delivering to your clients. Then you've got your staff costs, and then your premises cost usually is the next big ticket item. So it's worth spending time on there and planning. And you might actually definitely probably aren't looking at just a 12-month plan on what you want to do with premises. You need to be looking further ahead. Now, just quickly, I'll just briefly go through smaller items. You want to, you may, if you're running out of time, like I'm doing today, you might want to delegate some of that down to your managers or other team members to look at those particular line items. You know, ask your PA, can she go and get a better deal on your printer, or can you get a better deal on your franking? You know, that you know, rather than you doing all of it, try and delegate some bits of that. There are also companies out there that will look at all those base costs for you and do a whole exercise for you. So if your amount of cost is big enough, they will be happy to do that free of charge, and they will probably charge you something on percentage of what they could potentially save you. So that's another option as well. I personally like to continually look at my different costs, especially when they come up for renewal. So it should hope, so it's not such a big thing in my budget part, because usually they're already fixed because I've already negotiated whatever deal that I'm going to have. Finally, top tip, I've been through the sales, I've been through the costs, I've been through the different processes. The other thing that you may not be thinking about when you're coming to your budget, tax. Think, why am I thinking about tax? Tax is going to be what it is. Well, actually, there may be, when you're doing your budget, there may be potential tax savings. So that is definitely worth looking and talking to your accountant or your tax professional. So it could be that actually perhaps it's time to structure your business in a different way and potentially get some tax savings. It could be that actually you've got a lot of R&D in your business, and you could be actually looking at getting some R&D tax relief. Or another one is you may have loads of premises, you own lots of premises, and so you might have a lot of embedded capital allowances, and it's worth doing an audit on that. So, you know, so I do notice that people don't think about taxes when they're doing their budget cycle, but actually, you know, that can often be a quick win. If you've budgeted for all these things, all these different costs, and find that actually you've got potentially could, if you'd calculated your R&D, oh sorry, put that again, that you might find that, you know, that's 50 grand to the bottom line, for example, you know, like we find for a lot of our clients. So in that just then eases off, especially with all the different changes at the moment. It just helps you along the way to achieve your ultimate goals and get steady profits. I hope that was helpful. I know I've gone over, but as I said, I've been doing this a long time, so I could talk about this forever, hence why I was absolutely fine at doing this off the bat as a solo. Do let me know any other questions. I hope that was useful for you. Do let me know, just post down and say that was useful. As always, this will go live onto the we'll go onto YouTube. It's trouble doing it so low. I've got to do all the different pressing things as well. So it will go on to YouTube on Monday. LinkedIn, it usually comes up straight away. But anyway, thank you very much. Thank you for watching. I hope it was useful. Do come and chat to me or any of our management accounts team or our other accountants if you need any other help. We're delighted to help you and give you advice. Thank you very much. Have a lovely, lovely weekend, whatever you're doing. Thank you. Cheerio.